Welcome back. You're watching IndianOpen right here on BloombergQuint Live. Asia, as the market is shut, you've got the Chinese New Year, because of which Hong Kong and China are shut for trade. Japan is the only market that's trading, and it's trading heavily in the red on the back of the coronavirus scare. So that's down about 455 points, down about 2%. And a ripple effect here in India as well. The SGX Nifty is down over 100 odd points. Good morning, Neeraj.
Good morning, Devina. Difficult to map the impact. You can, as Seth Freeman said in the morning, the one thing that you can bank upon is volatility moving up. But aside of that, difficult to say. But yeah, I mean, the Dow future is also not looking very positive right now. So you can suffice to say that this is having its bearing on the markets for the time being.
Yep, and we'll see how our markets open up for trade. A lot of earnings impact is also going to be expected in today's session. Larger banks like ICICI Bank, Bank of Baroda were sort of disappointed on its earnings performance, and then smaller ones, the likes of prestigious states, which have been running up ahead of numbers, and what happens to that stock as we set up for trade this morning. Also important to keep an eye out on the derivative space. Navneet is joining us right now to give us a setup. Good morning, Navneet.
Good morning to both of you. Well, it's going to be an important week for our markets, considering this is the monthly expiry week. Of course, earnings will also be coming by, and the countdown to union budget begins now. And ahead of that, of course, you will see heightened trading activity, at least on the derivative side. What happened on Friday? The bulls maintained their momentum on the upside as the markets conquered the 50 DMA as well. So the closing came in positive. The premium was somewhere about 23 points. But remember, the last 2 days' gains have been on account of short covering. And since SGX Nifty is suggesting a gap down opening today, once again, bulls will look to defend the 50 DMA, which will be in focus, which is somewhere about 12,120. Similarly, for Bank Nifty futures, short covering was seen there as well, as the futures open interest saw shedding nearly to the tune of about 4%, though the Bank Nifty is still trading way below its 20 as well as 50 DMA. VIX definitely cooled off, but we're looking at India Volatility Index could rise when the markets open today. So 15.5 is the level where it closed. And looking at the PCR as well, there was more of put trading which came back into the system at about 1.42. Distribution for this week's expiry, it's broad, 12,000 put and 12,500 call. And on a Friday session, we did see more of put trading at 12,200 as well as the 12,300 strike. And the call writers also ran for cover at the strike of 12,200. So the range is, at least for the day, we look to defend the 50 DMA or not. That remains a key monitorable. In terms of individual stock futures, a lot of stocks moved around. Cement, steel stocks were in focus. So Ultratech posted its numbers, witnessed fresh long positions. JSPL was up about 5%. Fresh longs were seen there as well. Kotak Mahindra Bank saw short covering in trade. And also you had something like NMDC, which was down about 3%. On the futures side, there were fresh short positions seen. On the FI front, buying seen on the cash side, but there were short positions which were built on the index futures. Nearly 5,000 contracts were added, and they're still net short on index futures, whereas on the index options data as well, there were more of short positions seen in the form of put long as well as call short contracts being added. With that, it's back to you guys.
Right, Navneet. Thanks very much for that. Avinash, Gorakshakar, Director, Research at Profitmart Securities, is joining us right now. Avinash, good morning to you. The big number than ICICI Bank, which reported numbers, it was touted to be one of the banks that would do relatively better, and the results show it.
Yeah, exactly. I think, Devina, if you see the numbers, I think in line with market expectations, and I think to a large extent, the market was anticipating this, considering that this was a quarter where Essar Steel's NPA had been accounted. But I think one possibly marginal disappointment was on the slippages number. I think the slippages have been much higher than what the street expected. But overall, I think a decent set of numbers. If you see the net asset quality, I think it has come down on a YOY basis as well as on a sequential basis. And our sense is that both the corporate as well as the retail book should definitely grow stronger. In fact, the management has reiterated that possibly they could be hinting at a 15% ROE by June 20. So I think this is definitely something which would excite the market. And looking at the trend of most of the other private sector banks, I think this is one bank which has actually delivered on the numbers and not many negative surprises.
What about Bank of Baroda? That was a big miss, at least with regards to a spike in the asset quality deterioration.
Yeah, I think asset quality deterioration has been a big negative surprise. But I think even if you look at the advances growth and the overall asset book growth, I think that has been extremely disappointing. I think the markets were definitely not looking at such a big negative surprise. And our sense is that the stock could possibly correct significantly going forward unless and until the market sees a decent amount of growth on the loan book growth side and asset quality now getting stabilized. at least for the fourth quarter, hopefully we expect that asset quality levels could be sustained. But I think overall, the numbers which have come on the operating metric side, especially the loan book growth, the NI growth, I think that is something which the markets definitely could not be happy about. So I think it would be an avoid as of now. I would believe that it's better to wait for at least a couple of quarters before one could take a call here.
One set of numbers which also disappointed the street, which have come in below estimates if you look at them, not just on the headline numbers but otherwise on the internals, is JSW Steel. But the sector is doing okay. What do you think, Avinash?
I think, Neeraj, my guess is I think numbers were definitely expected to be much better, but I think markets are probably looking at the fact that the Jan to March quarter could be a much better quarter in terms of margins and in terms of top line growth. And I think the management is quite positive about it. Our sense is that, maybe from these levels, the stock may not correct significantly. But overall, I think numbers were definitely slightly disappointing, both on the operating EBITDA front and on the net profit front. And our sense is that possibly the fourth quarter could be better. So I think not a very, very good set of numbers, but at the same time markets are hoping that possibly the next 1 or 2 quarters one could see a turnaround and a strong bounce back on the EBITDA margin front.
Well, it should be interesting to see what this one does, because since the steel companies are just in such a good role that maybe the commentary from the management, which sounded a tad bit more optimistic in the quarterly performance, could maybe shore up the stock if indeed it were to correct today. Yeah, so it'll be interesting to see what happens there. Okay, let's wait and watch. JSW Steel is the other one that is an important set of numbers. Some other companies that you should watch out for in the session today includes some other results that were declared and a slew of important numbers that come out with the quarter 3 number delivery today. So let's take it to our research team to try and talk about all of those. Nikki Johnson with the key stocks in news, and then a spate of companies that you should watch out for on the back of what they are likely to report. So we join in full strength, Nikki, Somit, Darshan, as well as Shefali. Nikki, let's start with you first.
Yeah, a couple of earnings. I'm going to start off with a weak number first. Bank of Baroda, where there was a major quality disappointment, asset quality disappointment. Upfront recognition of merger transitioning cost impacted financials of the company essentially. Slippages too spiked, driven by the corporate segment. Also, we're looking at Prestige Estate Projects numbers, fairly good set of numbers, where the top line, we've seen a 2.5 times growth there. Net profitability too has risen by around 3 times, and EBITDA performance is fairly strong. The collections have fell despite the pre-sales in Q3, and the company in this quarter hasn't disclosed any debt numbers on consolidated levels. Third set of numbers, extremely strong set of numbers coming in from APL Apollo Tubes. Revenue, which is up by 25%. EBITDA, that's risen by 170%. It's the capacity utilization and the contribution of higher value-added segment, which essentially has led to solid set of performance from company, which is now giving in performance strength to strength. And also we're looking at Cipla, where the company has received 4 observations coming in by a US FDA, which has conducted an inspection at company's Bangalore API manufacturing facility. We're yet to understand how serious are they in nature. And also we're looking at Siemens, where the company has entered into a definitive agreement to acquire around 99% stake in CNS Electric for a consideration of around 2,000 crore.
Okay, thanks, Nikki. So watch out for all of those stocks, and we'll talk to Avinash about some of those. But then the key results that one should watch out for, maybe start off not necessarily with the index heavyweight summit. What should one watch out for today?
Well, for Indigo, if you see the standalone numbers are expected to be strong, revenues are expected to be high by 23%, EBITDA is expected to jump up by nearly 6.6%, margins are expected to come in lower at 17.5%, while the net profit is expected to be higher by 82% to close to 348 crore rupees. Yields are expected to be down by nearly 1% to 3.79 rupees per kilometer. Now, the revenue growth, that is 23% that the company is expected to report, will be the slowest in the last 5 quarters, and the passenger growth that the analysts are expecting from Indigo in this quarter is expected to be around 20 to 24%. The high passenger growth compared to capacity growth will lead to high passenger load factor, which is a positive. Along with this, lower fuel cost is another positive. However, these positives will be negated by higher employee and maintenance cost and M2M losses that the company is expected to report. Mark-to-market losses are expected to come in because of India's implementation. However, do remember that this MTM losses are just book losses and not cash losses, which could be reversed if rupee strengthens going forward. Now, fuel cost is expected to be lower because of lower lower ATF prices and because of lower fuel burn because of A320 news. Now, the average fuel prices were down by nearly 12% compared to last year, and that's the reason the fuel cost overall is expected to be low. Along with this, yields are expected to be weak for Indigo in a seasonally strong quarter because of the promotional fares introduced by the company in the third quarter, and high industry capacity growth is also one of the reasons why yields are expected to be overall weak in this quarter. However, grounding related compensation could be a positive surprise coming in for Indigo in the third quarter. Now, key things to watch out for from Indigo earnings would be update on A320 neo additions, along with this incremental slot allocations, guidance on yields and pricing power, view on industry capacity, and any management commentary on international expansion plans and promoter dispute would be important to watch out for from Indigo earnings today.
Okay, we will watch out for all of those. Thanks for that. So, Amit, on to the pharma major, Darshan.
Yeah, so it'll be stable. 9% top line growth is something that we're anticipating. On the bottom line, it will be close to a 2% growth, and for margins, it will be a 4% growth. That is margin rate pretty much in and around the 21-22% mark. Now, there were no major launches that the company did in the US markets this time around. Still, there are a lot of products under which, there is competition, there is price erosion. So US probably will be rather slightly sticky for the company. The only scope is the existing, is the market share gain in some of the products like Suboxone it has. So we are expecting $220 million of US sales that probably will come in. Injectable business has been doing well. OTC business has been doing well. So these are the key factors. Europe has been good. We're seeing more than a 20% growth that will come in because of the new launches that it did in the European market. For India, obviously, the trend has been good. We've seen how the domestic trends have been changed, have been moving. So a normal 10 to 15% growth is something that we need to watch out for. And finally, more importantly, will be the commentary what the management is looking at, what is happening in Nuvaring, which is one of the key products in which they haven't still gotten the approval, but key competition has already come in. What's happening with Copaxone? So all these key trends are something that we need to watch out with the management when they come out with the numbers today.
And of course, we need to also watch out for what HDFC will do. What's expected, Shefali?
Steady as always. That's what we can expect from HDFC this time. The net interest income growth of 6%. Profit expected to jump 2.8 times this time to 5,855 crores. And what is expected to boost their earnings is the proceeds from the Mahindra Finance stake sale, which is expected to be recorded or accounted for in this particular quarter. Apart from that, operationally as well, it's expected to be a strong quarter. AUM's growth of 15 to 16%, mainly led by growth in the individual loan book. Margins seem steady again at 2.5%. And asset quality trends, that's what we look forward to, especially in their builder finance book. So that'll be something really important to look forward to, whether there is any stress building up there. And they have a policy of taking around almost 30% provisioning whenever they have one-time gains. So close to 3,000 crores of one-time provisioning is something that we can expect in this particular quarter. And their sell down declined 40% sequentially this time around. So we look forward to all of this and any commentary on the market share gains as well.
Yeah, we certainly will. Thanks a lot, all of you, for giving us those updates. So some key results to watch out for and some numbers that came out which looked very strong. Well, two mid-sized names. Avinash, I don't know which one you track, so I'll toss both of them to you. APL Apollo Tubes and the kind of bottom line expansion on a slow base, or Prestige Estates, wherein EBITDA was getting impacted because of the Indies impact, but revenues looked very decent.
My guess is I think APL Apollo Tubes definitely has done an excellent job, and in fact it has been one of those smaller steel companies which actually has delivered excellently both on the volume as well as on the margin front. Our sense is that Neeraj, this stock could get further re-rated considering the fact that the management is extremely positive, some more expansion coming up, and obviously if they manage their cost well, I would not be surprised that they could even maintain these margins. As far as Prestige Estates is concerned, definitely a positive set of numbers. I think what is encouraging is both the top line as well as the bottom line has grown commendably. I would believe that further re-rating of the stock would depend on what kind of launches they have and typically how prices move in the Bangalore market, because they are large players here. But overall, I think a pretty decent set of numbers from these two small companies, and I think you could definitely see a good uptick even in these kind of volatile markets.
Maruti will also be reporting its numbers this week. Avinash, are you factoring anything?
Our sense is that definitely margins would definitely be stable, and on the top line growth, we are not expecting a very significant increase of 5 to 6% growth in the top line. But I think 9 to 10% drop in the profit is anticipated. I think going forward, what would be the margin outlook and the volume guidance, Devina, that would be key, monitorables, because I would not be surprised that the Jan to March quarter is also going to be a challenging quarter. On the ground, automobile sales have not yet picked up, and I think to that extent, the markets would be looking cautiously, ahead of the budget, what kind of announcements come in. But overall, I think at around 7,000 odd levels, clearly, I think one could definitely, nimble it for a long-term kind of investment.
Okay. Ruchit Jain, technical analyst, Angel Broking, is also joining us this morning. Ruchit, good morning to you. Let's talk about your trade on the indices, Nifty Bank.
Yeah, hi, very good morning to everyone. Well, frankly, if you look at last 2 or 3 weeks, then the market seemed to have now entered a consolidation phase in the broad range of 12,050, 12,100 on the lower side, and 12,300 seem to be the immediate resistance. So we are not expecting any significant trended move on the index in short term. Maybe next 3 or 4 trading sessions before the announcement of the budget, we would see some consolidation phase in the index. There's no point going short over here if we open 100 points lower as indicated by SGX Nifty. But if we get any further dips around 12,050, 12,100 range, I will look to create some long positions over there, since the risk reward ratio would become favorable over there. Bank Nifty has shown some underperformance in the recent past, and 31,500 to 30,500, these seem to be a very broad trading range for banking index. So I think I would focus here more on stock specific strategies rather than trading the Bank Nifty index. Nifty, as I said, I would wait for some dips towards 12,100 to enter fresh longs.
Okay. What about individual stocks, Ruchit?
So if you look at last entire week, in spite of that range in the Nifty, we had seen that the mid caps had continued the outperformance, and even the Nifty mid cap index is still showing some signs of strength. So I think mid cap would be one space where some good stock specific opportunities would be there. So I have 2 recommendations both from the mid cap space. First is a buy call in Equitas. Well, after a good amount of underperformance, finally in last week we have seen an up move which was supported by good volumes in this stock. The stock has also given signs of breakout from after some consolidation on lower time frames. So one can go long on Equitas with stop below 105 for target of 120. And Make Money Organics is another mid cap names which has seen an up move supported by very good volumes on the weekly as well as the monthly chart. Prices have seen a good high top, high bottom structure. So we expect this outperformance to continue from this name. From a short term perspective, one can go long on Make Money Organics with stop below 60, expecting targets around 73.
It's very interesting that the ideas are veering towards the broader end of the spectrum and not necessarily large caps, because that's where the activity seems to be very, very active. The other piece of a newsmaker before we get to our Bloomberg Edge segment is Siemens, wherein they have announced the acquisition of 99% stake in CNS Electric Limited at an EV of about 2,100 crores, if I'm not wrong. The scope of the acquisition comprises low voltage switchgears and panels, power push bars, as well as production and metering devices. Now, Avinash, I don't know if you looked at this development, but I think a couple of notes that have come out are saying that maybe this is not the best use of cash on the books on the part of Siemens. Have you observed this? Have you analyzed this? What's your view here?
No, I think Neeraj, this acquisition is not going to help Siemens, at least in the short term. I think looking at the kind of performance Siemens has put out, it is very clear that unless the macros improve and the government business improves, I think because a large extent of their business is determined by what happens on the macro front. They could definitely be accused that this kind of money invested in this asset may not yield immediate returns, but over the next say 1 or 2 years, this could be a very good acquisition, considering that this enables them to increase their market reach and customer kind of acquisition. But overall, I think in the near term, one could not expect a very significant kind of earnings kind of accretion purely from this acquisition. So apart from that, maybe the stock may not get re-rated immediately, but despite the fact that valuations are expensive, I would believe that hopefully some announcements in the budget come in and some kind of improvements come in the Jan to March quarter, one could definitely see the core business improving. But this acquisition, probably you'll have to wait for 1 year for earnings numbers to actually look up.
But you're not taking a call on the stock on the base of this development?
I wouldn't be, because the operating metrics for the previous quarter, Neeraj, were not all that great. In fact, the market was not very happy.
So that's my question actually. If that was the case and if they've done this acquisition, if you had the stock in your portfolio, would you get out of the stock?
I would definitely partly book out, because this is not a news flow which is going to re-rate the stock. Obviously longer term it is positive, but in the near term I think it does not add any significant value to the stock in the near term.
Okay. Well, do watch out for Siemens in the session today. This could well be a stock that you need to watch out for. The other one, on the back of results, we spoke about Prestige and APL Apollo. Avinash went, again, not a very liquid name, but the numbers left a bit to be desired.
No, I think they are largely a machine tool manufacturer, and I think looking at the kind of headwinds in the market, Neeraj, I don't think you're going to see a significant kind of uptick in this business, at least in the very near term. I think it would possibly take at least 1 or 2 quarters before we could see a kind of turnaround in their operations. I think top line itself was down by about 20% and profitability was hit. So I would not be surprised. This is a fairly illiquid stock. And unless we see a decent kind of improvement on the capital goods, players, basically because this business is largely driven from the capital goods companies, I wouldn't be surprised that this stock may not actually move up or move down, considering that not much liquidity is there in this in this cash counter.
Ruchit, the APL Apollo, do you track it as how the stock price performance has been off late?
Yes, the stock price have been moving higher and forming a high top, high bottom structure. And one notable thing is that since the month of November, whenever the prices have seen any kind of declines, the 20 days exponential moving average has been acting as a support. And after testing those 20 EMA, the stock price again resumes its uptrend. So as of now, the trend seems to be positive. The 20 EMA is now placed around 1900. So any existing long positions, I think they could still continue to ride the trend with stop loss below 1900, expecting targets around 2200.
JK Lakshmi Cement, Century Textiles, JK Cement, all of these names were up more than 6% on Friday's session. Any trade that's open here on any of these cement majors, Ruchit?
I think JK Cement has been a good has shown a good outperformance, and although even Century Textile has seen a very sharp up move in last few days, but JK Cement is one of the stock where the consistent outperformance could be seen in last 1 year. So I think that it would still continue its uptrend. Even at current levels, if one has to take a trade, then any kind of minor declines around 1300 could be a good opportunity to again take a fresh trade into the stock. The reciprocal retracement theory is indicating a probable target of around 1500.
Okay. Walk-hard 2 at about 300 is up 6.5%. Avinash, do you like this one?
My guess is I think Devina, the stock has corrected significantly, and unless we see some sort of regulatory issues, for most of the company's units being lifting off, I would not be surprised that even as of now the stock looks a bit shaky. Quarterly numbers have not been all that great, and I think all said and done, I would believe that until we see some clarity on the profitability and obviously on the headline top line number, I would preferably stay away.
Stay away from Walk-hard preferably, because it's not a predictable name is what Avinash Gorakshakar is saying. Okay, 8:52, time to get in our special segment Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Yash, good morning. What's the stock on your radar today?
Morning, Neeraj. So we're looking at Marico, and there's a formation of a bullish engulfing pattern on the daily charts for the stock, and that is a positive signal for the counter. Now, like we always do, let's first try and understand what the bullish engulfing pattern is and how do you interpret it. It's basically a 2 candlestick pattern wherein the body of the second candle is large enough to completely engulf the one ahead of it. The larger is the size of the second body's candle, the higher is the evidence of a bottom forming. How do you interpret? Basically, moving forward, taking a look at how the chart looks like on the daily time frame, and what we've seen in yesterday's day of trade, or actually Friday's day of trade, is that the stock moved up substantially higher, almost 2.5%, with volumes too being greater by almost 1.5 times its 30-day average. If you take a look closely at the candle, you will see that its open was equal to its low. So the first tick in Friday's day of trade, it never crossed below that mark even once, and it continuously kept on gaining on higher volumes, and with that it is forming that bullish engulfing pattern around the mark of around 330, 340. Now what's also interesting is the 2 circles that I've drawn over here, one at the price bracket and one over here which is in the RSI. So while it has come twice down to the levels of 330, it has acted as a strong support, but the momentum has slowly moved higher. So at 330 in the month of December, the RSI had bottomed out below the mark of 30. When it again came down to those levels, the RSI had inched higher. So that is another indication that slowly and steadily we are seeing the larger hands entering into the stock, and we saw that big move yesterday as well. So the risk to reward ratio is also extremely favorable. 330 is a strong support for the counter, and we could see higher levels at least. That is what the bullish engulfing pattern is suggesting.
Okay, and how well has this worked in the past, Yash?
Neeraj, 3 out of the last 5 times you've seen the bullish engulfing pattern form on the daily charts. On an average, on a 1-month closing basis, we've seen the stock gain almost closer to around 6.5% to 7% as well.
Wow. Okay, let's wait and watch if it gets repeat this time around. 3 out of the last 5 times is not a bad hit ratio too. Yash, thanks so much for putting that into perspective. Ashish Chaturmohta, head of technicals and derivatives at Sanctum, is with us. Ashish, thanks so much for joining in. Any of these staple companies, Ashish, look strong? I mean, the Bloomberg indicators suggest Marico could be very strong, but you may not be tracking Marico. You may be tracking Colgate, or you may be tracking, Dabur, for example. Any of these look strong on the charts?
Good morning, Neeraj. So first of all, I'll come to Marico. The interesting part is definitely the stock has formed a very strong base on the weekly charts, and after a sharp correction, I think this base is really giving a very strong risk reward at current juncture. So yes, I think with a stop below 328, Marico is a good buy. On upside, I think stock has a potential to see at least the 200-day moving average, which is around 365, 370 zone. But what we like is within the FMCG basket is also the Dabur, which is looking very, very strong. After consolidating for almost last many months, this is a fresh breakout into a new all-time high territory. Strong Y addition and long rollovers for last 2 series. So I think Dabur is a good buy with a stop below 490. I think it has a potential to see 535, 40 zone.
Okay. Talk about the 2 of the other stock ideas that you have for the morning, Ashish. We'll get to your index view in a bit, but I want to talk about the 2 names, Voltas as well as Page Industries. Why do you like these?
So sure. So if you look at Voltas, it has hit a 52-week all-time high territory on the Friday's trading session. If you look at last 2 days trading volumes, it is much higher than the last average 15 days trading volumes. We are seeing strong Y addition in the stock. So clearly, Voltas is showing a good traction. And if you look at the peers within the cash segment, names like Whirlpool, Johnson Control, they are also showing a very strong traction. So I think going forward, I think Voltas has a potential to see strong upside. 715 would be my trading stop loss. 750 is a short-term target one can expect in Voltas. Page Industries on the weekly charts, this stock has formed a major inverted head and shoulder formation. You look at the activity in the last 7-8 trading sessions, stock has moved very strongly from 24,500 to almost 26,700, 800, and then cooled off to 26,200. So I think clearly it is forming a strong weekly reversal pattern. Here one can niche it along, keeping 25,850 as an trading stop loss. On upside, I'm expecting stock to hit 27,000 kind of zone in next couple of few trading sessions.
Well, the last few days, Page has had a remarkable uptake as well. So do watch out for that one. Could be an interesting stock to monitor in the session. The stock which has also been in focus the last 2 days is Westlife Development on the back of very strong numbers. But they've also announced that they are one of the first eateries to remain open 24/7 now, and other new rules in Mumbai. So that plus the results, Avinash, how do you view Westlife as a stock? It's now run up quite a bit. So maybe is the risk reward not in an investor's favor, or is it?
No, I think, Neeraj, if you look at the trajectory of this stock was always available at expensive valuations. And I think despite the fact the stock has run up, if you see the quarterly numbers, a very strong kind of growth on the bottom line. In fact, on the business side, their SSG growth has also been pretty solid, around 9%. And they have opened almost 9 new, outlets. So I would believe that, going forward, the management is very hopeful and positive on the incremental top line growth as well as the margin sustainability. I would believe that any decline should be used as an opportunity to actually accumulate this stock, because it's a clear consumption theme play available. And most importantly, with this new 24/7 rule applicable, I think the food eatery businesses, especially something like McDonald's, could possibly benefit significantly. So I think for numbers to come in, maybe we may have to wait for a couple of quarters, but this definitely could add a decent amount of top line growth, as the regulation has put it out.
Okay. By the way, we're very close to market open on the other side. Remember, we'll talk about a couple of these auto-linked companies as well, auto financiers. So we're going to speak to Muthoot Capital at 9:30. So that's an interesting conversation. But MMFSL comes out with numbers, and that's another stock that we'll talk about, because maybe the December quarter numbers get impacted due to the lower sales, but maybe the time ahead for Mahindra and Mahindra Finance could be an interesting in the Jan to Feb March quarter. So we'll talk about that with Avinash, Gorakshakar as well. But about a minute left for the markets to kickstart trade. Just one quick perspective from you, Ruchit. We've discussed what will happen to some of the large cap names on the back of the results, which is Page and rather JSW Steel and ICICI Bank. Quick thought on Axis Bank, 30 seconds.
I think broadly if you'll see last 3 months, the stock prices has consolidated in a range, and as of now, there are no signs of breakout. I think so we would continue this stock, seeing some consolidation phase. If any existing long positions are there, then 700 is a crucial support for the stock. One can continue to be in the stock with stop below 700.
Okay, I think we've got about 30 seconds left to go for market pre-open. So let's stay focused there. SGX Nifty is down by 1% or so. 125 points given up by the SGX Nifty, 12,147. Rest of Asia is closed for Chinese New Year. It's only Japan that's trading in this session. That too is trading with heavy cuts of about 2%, 455 points lower for Nikkei 225. Individual stocks, and ICICI Bank is going to be the first one that you're going to be watching out for during pre-open on the back of the good numbers that it posted from the index at least. That's up about 3.5% right now at 549. The Nifty itself is open lower by about 0.25%. You've got the Sensex, which is up 1.3%. But obviously, we'll wait for all these prices to come off and consolidate. Initial ticks that you're getting, HDFC Bank too are on the higher side. HDFC Limited ahead of numbers is trading positive. UPL, Asian Paints, Britannia, Reliance Industries at 1532. You've got Coal India, Hindalco, Dr. Reddy's, Kotak Mahindra Bank, Grasim and Titan, which are doing well. Stocks which are not doing well, Ultratech Cement is down, is showing you an unnatural Ultratech Cement and L&T. This will obviously not be the case, but right now it's showing you a 9% cut. Tata Steel is down 1.7%, JSW Steel is down 1%, ITC, Cipla, Wipro, Kela, some of the other losers in trade, was 71.45 on the rupee versus the dollar this morning.
Another stock that you mentioned, Bank of Baroda, and will not necessarily have a 10% downtick, but the numbers were poor, and therefore the stock may react negatively. So do watch out for BOB in the session today. I wonder what Prestige Estates would do, but just want to mark what the pre-open rate is indicating, if anything. 2-3 announcements, including the results, plus that preferential issue to GIC. The stock may start off higher. APL Apollo, it's not as liquid a stock as some of the others, but the numbers were very strong. For now, not showing any dramatic uptick. This may change. Let's wait and watch. Let's give all these rates a chance to settle down before we talk more about them. Even Astral Poly, I doubt we'll have a 6% uptick. So let these rates settle down, and then we'll talk more about them. I wonder if the bond yields and the reaction, we'll get them as well. By the way, remember, they've been already marked the currency at 71.49, so that is starting off weak. And in a period of scare around oil markets, but crude having corrected the way it is, maybe, just maybe, the yields would be a bit contained than what they normally would be. So that is something that you got to keep at the back of your mind. By the way, the crude correction is the one other key monitorable that you need to watch out for. I wonder if any of the oil marketing companies, Ashish, are giving you any kind of indications of a long trade, IOC or a BPCL.
Yep. So not really. I think more of a range-bound trend what we are witnessing. But yes, I think on day like this, there can be some actions, some short covering which can be witnessed. For that, I think IOC is better placed, because there we have seen the maximum damage because of the CPSC thing. But I think now going forward, some pullback towards 125, 126 could not be ruled out. And for that, I think one need to keep 118 as a trading stop loss.
Mm-hmm. Okay. Ashish, just a quick word on the index as well, because while the first few rates don't quite show that we are likely to start off lower, would you trade the Nifty or the Nifty Bank, which is a stronger trade?
So I think Nifty would be a stronger trade. The reason being, if you look at, IT is one space which is looking promising. And if you look at a few of the FMCG names like Nestle, or for that matter, even within the pharma basket, names like Dr. Reddy's are showing a good momentum. So the strength can come from IT as a basket, which can support in Nifty as an index in a better way. I think important support in Nifty is around 12,170, 180 zone. So keeping that as a stop loss, I think one can look for dips to be on the long side of the trade. We expect index to slowly inch towards 12,350 to 400 zone.
Okay. The other set of stocks are ones which notched a new highs and consistently doing well. It's not just a one-day move which led these stocks to do what they did. So ICICI Securities was one, Atul Limited was one, AU Small Finance Bank was one. So some very strong moves in these stocks for the last few sessions. Today may be iffy because of the market mood, but otherwise have been doing okay. I mean, what's happening with AU Small Finance Bank, Avinash? I can understand the numbers looked okay, but the run-up has been pretty substantial in this one.
I think, Neeraj, the markets are pretty excited and optimistic on the fact that this bank, ever since it went public, has been actually growing its loan book and profitability at significantly high levels as compared to the other PSU banks. And I think asset quality till date has been quite strong. So I think it's a clear case where some sort of market share gains have come in at the cost of the PSU banks. And I think the kind of segments AU Small Finance actually caters to, the SME, the MSME segments, I think there is definitely a lot of headroom to grow. So I would believe, the markets are obviously putting a premium to this player, considering the fact that despite a very challenging kind of macro environment, they have managed to keep their asset quality levels pretty decent, and obviously at the same time, show a decent amount of growth. So I think maybe on correction, this could be a good opportunity. The stock has run up significantly from 750, 800 odd levels. So I think one could definitely get a better risk reward, provided, one gets a decent entry point. But nevertheless, outlook for FY21 also looks pretty strong.
And just following up on that, the capital, the auto financiers, so Muthoot Capital as well as MMFSL, Mahindra Finance, which comes out with numbers later this week. What do you expect that company to deliver?
I think Muthoot Capital delivered a moderately, steady to not a very exciting set of numbers. But if you talk about Mahindra Finance, I think their main catchment is the agri segment. I would believe that, looking at the kind of downtrend on the tractor market, the commercial vehicle market, this quarter may not be all that great. I think the key thing to watch, Neeraj, would be the asset quality number. Asset quality for Mahindra Finance was a pain point for the last 2 to 3 quarters. And I think if at all there is some improvement here, I think the markets could possibly take it positively. But yes, hopefully, I think I would not be surprised that, the tractor market is turning around and we could see better numbers, for the fourth quarter, that is Jan to March.
Okay, that aside, some other stocks that you need to monitor. I know you would take the top call from our experts, but since this stock has been so active the last few days, I'm tempted to ask Ashish about his call on Godrej Properties. You have a buy call there, Ashish. The stock has run up quite a bit already. You would be comfortable buying at these levels, and if so, would you buy it on open today on a weak market day, and what are the targets?
So I think, Neeraj, we need to look at a longer term chart on this. And if you look at the stock has hit its all-time high in July 2019, and since then it has been consolidating. So almost 6-7 months of consolidation, and still we have not hit the previous all-time high, versus if you look at what Prestige is doing, Nesco is doing, Phoenix Mills is doing. So I think there's a clear uptrend which is getting witnessed in the stock, and the last 2 days is a clear momentum setting into the stock. So I think on the weekly chart this is a strong breakout. I would like to initiate a long position even at current levels in Godrej Properties with a stop around $1,000. I think stock has a potential to see at least the previous all-time high, and positionally we believe the stock has a potential to even see 1300 kind of levels in next 3 to 5 months time frame.
The interesting thing about Godrej Properties is that during the day it may meander around flat levels, but suddenly there is a spike which comes in, and you think that the stock would be somewhere around 950, 960, 970, and then it just suddenly shoots up. The last 2 or 3 sessions has this happened, and at 1050 it certainly gained quite a bit. The question is, can it do more? Ashish certainly believes that Prestige Estates would be a stock that you should monitor and should go long on in the session today, even though the start of the day could be slightly weak. By the way, Godrej Properties, excuse me, yeah. By the way, APL Apollo at the end of the pre-open session looks like starting off 7.5% higher, so that's one result reaction you need to watch out for. JSW Steel, ICICI Bank are the other two that you need to watch out for. JSW Steel likely to start off 2.5% lower. And then I wonder what Bank of Baroda is up to, because that's the other stock that came out with numbers and not the most pleasant of numbers, likely to start off lower. Ruchit, a quick thought here on the two stocks which are looking weak, JSW Steel or Bank of Baroda, any one of them on the charts?
I think JSW Steel, although today it's their weakness, but the broader trend still continues to be positive. So I think if we get any such dip, that could be a good buying opportunity for if anyone is looking for a short to medium term. 255 is where the good support for the stock is placed up to a 200-day moving average. So any declines towards 255 should be used as a buying opportunity. I would advise staying away from Bank of Baroda as of now, because in this pullback rally, this stock has shown an underperformance. Rather, if anyone is having this stock in the portfolio, I think it would be a good idea to switch over to SBI.
Okay, do watch out for some of those stocks in the session today. While we are minutes away from market pre-open session, pre-open session is ended from the markets open. It'll be also interesting to remind our viewers of all the key stocks that you need to monitor and the key developments that you need to monitor. Because remember, aside of other things, the two big things: one, crude has come off, and that will have a bearing on some of the related stocks, and the bond yields could be the other interesting bits to monitor too in the session today. Simply because crude price coming off just gives a bit of a support to the yields. So 6.55, not a dramatic reaction. Since you are minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, ICICI Bank's asset quality improved, aided by recoveries from SR Steel. However, slippages rose 76% on a sequential basis.
Amongst other earnings, JSW Steel's earnings were below expectations due to lower prices and realizations. On the other hand, Bank of Baroda's asset quality deteriorated while slippages rising due to corporate segment.
The US FDA has issued 4 observations for Cipla's API manufacturing unit at Bangalore.
Siemens India has signed a definitive agreement to acquire 99.2% stake in CNS Electric for 2,120 crore rupees.
Amongst key brokerage calls, Citi has downgraded Aavas Financiers to neutral from buy. It has cut the price target to 1,900 from 2,100 rupees.
And HDFC and Dr. Reddy's are the two nifty companies that will be reporting their earnings today.
Well, we'll watch out for all of these names in the session, but JSW Steel likely to start off weak, and that doesn't augur well. L&T, after 2 or 3 days of an uptake, also gives up some of the gains, so maybe just routine profit booking, but that's something you need to monitor. Avinash, as you've observed a set of earnings in the first 25 days of the month of January, which number has stood out the most for you? Any number, or any 1 or 2 numbers that have looked very interesting, either from a good performance or from a poor performance?
I think clearly, I think from the private banking pack, as I mentioned to you, ICICI Bank has delivered a pretty decent set of numbers, and the management commentary has also been very solid. As far as the negative surprise goes, I would believe that, I think probably we are waiting for most of the bigger auto numbers. So I think, something which is yet to come in. So I think Tata Motors numbers, I believe, are going to come in this week. And I think, one would be very closely watching what kind of numbers they put out. I would not be surprised that we could see some further stress on their operating margins as well as on their, on their bottom line. So I would believe that probably some more correction on the Tata Motors stock could happen. And considering the kind of headwinds both in the domestic as well as in the European markets, I think Tata Motors definitely looks pretty weak. But on the other hand, clearly from the private banking back, any dip on ICICI Bank would be a good opportunity.
Okay, any dip on ICICI Bank could be a good opportunity, though we may not have the dip. 538 and counting. Actually, private banks have just looked all that strong, because even the other day, Axis Bank, after delivering a mixed quarter of sorts, recovered a lot of lost ground in 732 and counting. So that is doing okay for itself as well. Actually, these banks, Ashish, ICICI and Axis Bank, how do they look on the charts?
So ICICI is in a strong, clear uptrend, and despite seeing a sharp uptick in the last couple of few months, it has been consolidating for a while. So I think clearly good signs. Stock has a potential to see 560, 570 mark on upside, and on downside, I think 525 is going to be a key support zone for ICICI Bank. As you were talking about Axis Bank, it has also taken multiple supports at its 100-day moving average for last couple of few weeks. So here also, I think the technical setup is becoming much stronger, although the momentum will start once the stock crosses 740, 745 zone decisively. But broadly, what we are understanding from a short-term pattern formation, it indicates 725 is going to be a key support for Axis Bank. Until it is closing above 725, I think the trend is looking promising.
Well, a set of stocks likely to start off lower because the market itself, though the pre-open rates don't quite suggest a 1% downtake as the SGX was indicating. But mind you, Dow futures are in the red, and whatever is open in Asia, which is Nikkei, is not looking all that strong. So we don't have a great start at our hand. The question is, can it improve during the course of the day, and will this impact, arguably, of the coronavirus scare be short-lived? That is, a question which is very difficult to get answered with. Avinash, just one last word. A stock that's been very volatile but largely on the uptrend, JSPL. Quick 30 seconds. What's your thought here?
No, I think I would believe that we could see better set of numbers for the fourth quarter, and I think already there has been some marked improvement on the operating metric side. So I think clearly, at these levels, Neeraj, this definitely offers a decent risk reward, provided one is looking at FY21. Maybe for the fourth quarter we may not see a big improvement, but FY21 from the metal price increase as well as the operating profit increase, I think I would definitely look at it positively.
Okay, Avinash, take a moment to thank you for joining in today and giving us your thoughts. Really appreciate your time. Ruchit, Avinash, let's nail it down to that one top idea from both of you. And Ruchit, I'll come to you first. Your top stock call for the session today.
I would recommend going long on Chambal fertilizers. Primarily during a couple of weeks ago, we had seen a breakout with high volumes, then a consolidation phase which has led to formation of a bullish flag pattern technically. It's a buy at current levels with stop below 168 for target around 182.
Ashish, what's your top call?
So in the FNO segment, I think I'll go with Voltas with a stop below 715 for an upside target of 750. It's a strong monthly breakout. So I think any dip is an opportunity to be on the long side of Voltas. In the cash segment, as I mentioned, Godrej Properties is looking very promising. Any dip here would be a good opportunity to be on the long side. 1150 is a short-term target. On downside, 1000 should be the trading stop loss for going long into Godrej Properties.
Okay, Jain, stay on. We'll just take in quick opening thoughts from you and then get in Gopal Agrawal in the conversation as well. But the market's likely to start off slightly subdued. The question is, can we dip further from those levels? That's the million-dollar question. We'll get to know about it in a few minutes from now. But here's how the markets are starting off. Not as bad as the SGX was indicating, but in the red for sure. 0.5%, and now starting to dip very, very quickly. The Nifty is now down 0.61%, so 74 or 75 points in the red. There is weakness in the Sensex, naturally so, 229 odd points, and the banks are down about 200 points. So nearly 2/3% in the red, now 0.7% for the bank Nifty. So yes, we have dipped a little bit more than the pre-open, but not as much as the SGX was indicating. We'll ask our experts if this is an area to go short on. But first, the mid-cap and the small-cap indices on your screen. Start of week, the mid-caps, the small-caps a bit more resilient. Let's see how the rest of the morning shapes up. For now, there is red across the board. Get the heat map up. I guess more red than green. Yes, hardly any green actually. ICICI Bank is the lone ranger of sorts, up about 1.5%. Aside of that, UPL, iShares here and there, but nothing too dramatic. Even the oil sensitives are not quite there. BPCL marginally in the green, but that's about it. So ICICI Bank is the only one, but that is doing very well, 1.8% up for itself. So really strong show by this one. What about the broader end? What about the losers actually? So all metal names correct today. JSW, Vedanta, Tata Steel, Hindalco, everything in the red. JSW Steel, the added pressure of the results as well, so down about 3.5%. We have weakness in Kotak Bank and HDFC Bank, so about 1.5% apiece for both of those. By the way, those two heavyweights correct in tandem, as also State Bank of India. Reliance Industries is down about 1%, so we've got a lot of heavyweight stocks in the red, and no wonder, save for ICICI Bank, almost all the other key heavyweights are in the red, as a result of which the 0.5% downtake. So doesn't look too great at the start. Let's wait and watch if this changes or does it worsen actually. For now, it's just about 0.5%, but a lot of red. Very quickly, stocks which should matter today, couple of stocks which should be reacting to their earnings, APL Apollo as well as Prestige Estates, and both of them very strong moves, 7% apiece for 7% for APL Apollo and 4.5% for Prestige Estates. So those are the two that you need to monitor on the earnings front, at least for mine. And some stocks which have been hitting new highs. Let's see how they're starting off today. All of them without exception starting off lower. AU Small Finance Bank, after the massive uptick that it has seen, down about 1.5%. Devina, what are you spotting?
Well, we've got some result reactions for Bank of Baroda as well, which is open lower by about 3%. You've got JSPL, Jindal Steel and Power, that's down about 3%. The likes of Ashoka Buildcon, ITD Cementation, these are all the names that are looking weak this morning. The other ones that you already highlighted, APL Apollo, which has done well in terms of its results, that is holding ground in today's session. Amongst that, Vodafone Idea is down again. You've got a few gains in the form of a Deepak Fertilizers. Pakrangi is up 4.5%. National Fertilizers up. RCF is up. So the entire fertilizer pack is up and active. BGR Energy is up about 3%. Dr. Lal Path Labs is now at 1727, so that does well. Central Bank of India, walk hard. Edelweiss moves up at 94 now after seeing a big knock of about 14% last week. Indian Bank and all the cement counters like pre-open are doing well. Zensar Technologies, after that disappointing quarter and the result reaction on the negative side, is trading with gains in today's session by 1.5%.
Well, the start is promising. Before we get in, Gopal Agrawal, quick opening thoughts. Ruchit, any stock that catches your eye on open?
So I would again say that, as I said in the start, that broader markets are likely to continue its outperformance. So one mid cap or small cap stock that technically is looking good is MRPL. A long underperformance has been seen, but in last few days we can see good amount of rise in volumes, which indicates that fresh longs are being formed over here. So one can buy MRPL with stop below 45 rupees. We are expecting target around 52 to 53 in very short period of time.
Okay, Ashish, quick thoughts. Any stock that stands up for you?
So I think I'll go with MGL, which is looking very promising in the oil and gas segment. There the trend is getting promising. 1178 would be my trading stop loss, upside 1215 in a very short term in MGL.
Okay, gentlemen, I will leave it at that. Both of you, thank you so much for taking the time out and joining us early morning and giving us your thoughts. Well, a lot of stocks that you need to monitor, and you can from the basis of the advice that you've received thus far. Get in Gopal Agrawal. He's Senior Fund Manager and Head of Macro Strategy at DSP Investment Managers. Joins us right now on the show. Gopal, good having you on BloombergQuint. Thanks so much for joining. It's our first time, so welcome. What's your sense, Gopal, of all that's happening? No one quite estimated the coronavirus to be the risk to the markets, and it's fast turning out to be that. But it's an eventful week that we have. Coronavirus, Fed, expiry, and the union budget. How do you approach the markets?
So my sense is that the market will look more for the direction of the earnings in the current season, and also the sound bites on the budget. But the heartening point, what we are seeing, the management commentary in the December quarter result, which has come so far, they are seeing the uptake in the demand in the month of December and January. So my sense is that any correction would be a buying opportunity. Add to this, what we have seen that external side, India is looking good because of manageable current account deficit, and also like we offers very good yield difference to the Western world. So with a combination of this, we are seeing also manageable slippages are coming within range. The fresh slippages formation are really reducing. So also the banks become a good the trade, which is very heavyweight on Nifty. So net I would say that the risk reward is still favorable because many of the positives are likely to be priced in going forward.
Gopal, what's your estimate? I mean, since you had the macro strategy as well, because we have the union budget coming up, and I think a lot of attention of the market right now seems to be around what comes out on the fisc number. Now, there are two ways, right? A lot of people, there is an equal number of people who believe that it's okay to slip on the fisc as long as it's used for immediate consumption expenditure. I'm saying that any kind of expense that the country does should be on long-term or medium-term investment-related expenses and not consumption. What do you think the markets will like more?
See, the market will certainly like to have a fiscal number, fiscal deficit number sub 3.5% or so. That will be really an expectation from the market. But certainly, if this all fiscal slippages which comes in the form of the capital expenditure rather than revenue expenditure, that will really be welcome. Because what we have seen, there is still private investment is not picking up. So whatever all the heavy lifting is done by the government expenditure. So far the private expenditure comes in. My sense is that heavy lifting will continue, and any capital expenditure is welcome rather than revenue expenditure.
Okay. Gopal, what's the investment strategy? I mean, you guys in your funds have now a quant fund which focuses on quality, and then the relaunch of the mid cap and small cap fund, which probably means that you may be believing in the rebound of the broadening of the markets as well. What's your sense? If you get in fresh large sums to invest in right now, what would the allocation look like?
So frankly, the investor should always look at asset allocation rather than just focusing on a one market cap bias on the portfolio, which is always tricky, because I always say India is the one country which will disappoint both optimists and pessimists. So in the current scenario, what has happened, with the deep correction in the month of July, the mid and small cap segment had become really cheap, and most of the on a broader side, if I say, they were trading at close to book value, so, and the valuation difference between mid and large cap at that point of time widened to 35%. That was historically high. And in the near term, what we are witnessing, there is a in the banking system, liquidity surplus is over 4 lakh crores. So the rate transmission has just started from mid of November. The AAA and AA spreads are narrowing. So my sense is that now this is the time that mid and small cap will certainly outperform the large cap. But on the large cap side also, what we have witnessed, the 10 stocks have done all the work in CY19, while the remaining large cap stocks have also underperformed very decisively. Now their valuation has also come down dramatically. So my sense is that as the GDP growth rate has bottomed at around 4.5%, and there is a gradual recovery is in sight. So the investor should have the combination of large and the mid cap and small cap in the portfolio. And I am sure that this year mid and small cap will outperform large cap, but proper asset allocation is definitely required. Even large cap can do well. Because what we are seeing, there is a really recovery in the earnings picture in going into FY21, and a lot of deflationary pressure which was there in the economy is now turning to normalization. So whenever this normalization happens, you will see WPI, which was trading at around 0.3, 0.4%, has now moved up to closer to 2% or so. So definitely there is some reflation is coming back. So the broader market is likely to do well. That's my sense.
Broader, okay. And Gopal, so within the broader markets too, there are themes which have done really well in the whole of 2019, specialty chemicals, real estate, for example. Metals started showing a bit of a bounce. Where do you think you will allocate money? In beaten down pockets, or in the broader market themes which are actually doing well fundamentally?
So I won't stick to a particular theme, but what we are witnessing, clearly there is a real improvement in many of the things. We are seeing, like agriculture commodity prices globally has moved up close to 9.72%, which is a UN Food and Agriculture Price Index. So definitely, which will be positive for agrochemical, pesticide and fertilizer industry. Also, Rabi sowing data is very heartening. So rural economy is likely to turn better. Similarly, we are seeing the signs, that there is a recovery in the commodity prices, especially the industrial commodity, whether it is a domestic cement or steel. So definitely that pocket is also looking interesting. On the financial side, definitely retail lenders are still getting the benefit of a consumption boom in India, and also on the margin trajectory is on upward side, which is also positive. So I will be keeping my portfolio much more broad based rather than narrow, and also keep in mind that any kind of marketer, whether it is oil and gas market, oil marketer or gas marketer, they are also benefiting from the low input prices. So definitely on a broader sense, I would say that market is likely to see earning recovery broad based, and also it will include percolate to the pharma sector also.
You bullish on the oil marketing companies, Gopal? There is one, the crude factor, but two, this whole issue around the constant supply from the CPSE ETF issuances that come in, or for that matter the whole divestment scene surrounding them.
So gas marketing is really a clear winner, and in the oil marketing side, what happens, the problem is on the refining side. because of lot of incremental new capacities have come in China and also getting commissioned in USA. So the refining margin outlook is not very strong. Only thing is that there can be some upside can come from IMO 2020, which has not yet kicked in. That's the only positive hope. Otherwise, the supply is quite large. So refining is not great, not doing great at this point of time. But definitely marketing per se, the core marketing is doing great, and also there is no overhang of subsidy on the oil marketing companies. So I would say the 2 positive, 1 negative. So net they are still fairly okay in the portfolio.
Okay, one last question. The capital market link plays, Gopal, and I'm restricting myself to the asset management companies or the life insurance companies, which also now getting the capital market flows. Do you like them, or do you believe they are expensive?
So any business which offers you long-term growth potential and also which is under-penetrated, definitely it will always trade at a higher multiple than the matured businesses. So in that context, you have to look at both life insurance and asset management businesses. But still, I feel that life insurance has much more room to grow, and both in life and non-life. So I am more bullish and constructive on insurance than asset management in my portfolio.
Okay, Gopal, it was great having you today. Thanks so much for joining us on BloombergQuint, and look forward to chatting with you more often.
Sure. Thank you very much.
Well, that's the view from Gopal Agrawal from DSP. Take a moment to just mark the markets, and banks have corrected the most, by the way. The Nifty Bank is down about 0.7%. The rest of the markets not as bad as the SGX was indicating. The question is, can it dip further? And I think that is something that we'll watch out for. ICICI Bank is holding out, but the metals are being taken to the cleaners really today. JSW Steel, Vedanta, Tata Steel, Hindalco, JSPL. Look at the Nifty Metal Index, down about 2.5%. And without exception, we've had companies correcting today. So there's a big drop in that bucket. It's not a large heavyweight, but it's certainly impacting. And now as I speak, the Nifty Bank is already down 255 points. So now we're seeing the first round of post-open selling coming in, with the Nifty Bank correcting quite severely, and the Nifty 2 is trading around the lowest point of the day. So not the best of starts. Let's see if it improves. We try and talk about the numbers, or some numbers though, on the other side. Muthoot Capital Services earnings, the CEO Madhu Alexius Johnson, and then we discuss the business outlook with Sumant Patel of Nesco.